Are you looking for more deductions to decrease your taxable business income and pay less in taxes? There is a legal IRS-approved way to decrease your taxes and build your retirement savings at the same time. When your business contributes to a retirement plan, such as SEP IRA, Simple IRA, or 401k, these employer contributions are tax deductible and they decrease your taxable income. And when your employees make pre-tax retirement contributions, they decrease their taxable income as well. If you're a business owner or self-employed, you have a great opportunity to turn your retirement planning into a tax-saving strategy. These retirement plans work for most types of businesses, and the key is setting up plan correctly and managing it over time. And the best part, many of these plans can be set up on your own, no financial advisor required. My name is Svetlana Kim-Chon and I am a California CPA. In this video, I'll explain how SEP IRA, Simple IRA, and 401k plans work, who qualifies, how much you can contribute per year, and what steps to take to set up each plan. SEP IRA, or Simplified Employee Pension Plan. A SEP IRA is a retirement plan for self-employed individuals and small businesses. Only the employer makes contributions. If you have eligible employees, you are required to contribute the same percentage for them as you do for yourself. Contributions are due by your business tax filing deadline, including extensions. Contribution limits for 2025. Employers can contribute up to 25% of each eligible employee's compensation, including the owner-employee, with a maximum contribution of $70,000 per employee. If you're self-employed, your SEP IRA contributions is 25% of your net business income, but the IRS formula adjusted to roughly 20%. For example, if your net business income is $100,000 and you choose a 25% employer contribution rate, your SEP IRA contribution would be $18,587, which is roughly a 20% effective rate for self-employed income. If you have employees, you're required to apply the same 25% rate to each eligible employee. So, if an employee earns $50,000, your contribution would be $12,500. How to set up a SEP IRA? Choose a financial institution as your provider, such as Fidelity Investments, Charles Schwab, another financial institution, or check with your local bank to see if they offer SEP IRA accounts. Open this plan accounts for yourself and all eligible employees. Complete IRS Form 5305 SEP with your provider. Keep this form for your records. Do not file with the IRS. Simple IRA, or Savings Incentive Match Plan for Employees. A simple IRA is a retirement plan for small businesses with 100 or fewer employees. Both the employer and eligible employees can contribute. Eligible employees, including business owners, qualify if they earn at least $5,000 in any 2 previous years and are expected to earn at least $5,000 this year. The plan generally needs to be set up by October 1st for the current year. Employer contributions are due by your business tax filing deadline, including extensions. Contribution limits for 2025. Employees can contribute up to $16,500 per year, plus a $3,500 catch-up if age 50 or older. For individuals ages 60 to 63, the catch-up amount is $5,250 under the Secure 2.0 Act. Employers are required to either match up to 3% of each employee's compensation or contribute 2% for every eligible employee, even if the employee doesn't contribute. If you're self-employed, under a simple IRA, you're treated as both the employer and the employee. Your employer contribution is based on your net earnings after deducting half of your self-employment tax. You also use the same match or non-elective percentage for yourself that you use for your employees. The process for setting up a simple IRA is similar to setting up a SEP IRA. You follow the same steps, But you complete either Form 5304 Simple, if employees can choose their own financial institution, or Form 5305 Simple, if you choose one institution for everyone. Keep this form for your records. Do not file with the IRS. 401k plan. A 401k plan is one of the most flexible retirement options for business owners, offering higher contribution limits than SEP or simple IRA. Both the employer and employees, including business owners, can contribute. Employer contributions are due by your business tax filing deadline, including extension. Contribution limits for 2025. Employees can contribute up to $23,500 per year, plus a $7,500 catch-up if age 50 or older. For individuals ages 60 to 63, the catch-up amount is $11,250 under Secure 2.0 Act. Employers can match employee contributions or make profit-sharing contributions of up to 25% of eligible employee compensation. Both options are completely optional. The combined limit for employee and employer contributions is $70,000, plus any additional employee catch-up contributions. However, if you're a business owner with no employees, other than a working spouse, a solo 401k plan is designed for you. Both you and your spouse can contribute as employees. This plan allows higher contribution limits because you contribute as both the employee and the employer. This also applies to self-employed owners because the IRS treats you as both for contribution purposes. Let's say your business pays you a salary of $100,000. As an employee, you can contribute up to $23,500 or more if you qualify for catch-up contributions. Then, as an employer, your business can contribute up to 25% of your salary to your plan, which is $25,000. Altogether, your total solo 401k contributions in this example is $48,500, and even more if you qualify for catch-up contribution. How to set up a solo 401k and traditional 401k plan. The process for setting a solo 401k is similar to setting up a SEP IRA. You follow the same steps, but instead of IRS Form 5305, complete your provider's solo 401k plan documents. Keep these documents for your record. Do not file them with the IRS. To open a traditional 401k plan, you need a plan provider or administrator, such as Fidelity Investments, Charles Schwab, Merrill Lynch, or another financial institution to handle plan setup, compliance, and reporting. You can also check with your bank or credit union to see if they offer 401k services. Employers with traditional 401k plans are required to file Form 5500 annually. Retirement plans can be confusing, so let's make it simple. Here's a quick side-by-side comparison for 2025. This table shows contribution limits, who contributes, and what's required to set up each plan. Please note, for SEP IRA, Simple IRA, and 401k plans, the maximum compensation that can be used to calculate contributions in 2025 is $350,000 per employee, including business owners. If you're a business owner, you can legally reduce your taxes, build your retirement savings, and grow long-term wealth at the same time. Every contribution you make keeps more money working for your future instead of going to the IRS. Talk to a tax professional to see which plan fits your situation or leave your questions in the comments below.